I think what you just said, just the idea that after that dot-com bubble burst, how long it took for the markets to come back. I mean, that's kind of the scary thing. We have a group of retail investors who are conditioned to kind of buy on the dip and that it always comes back. It might take a while. There's no guarantee that this pops back like we've seen in recent history.
No, I agree, Becky. There's no guarantee it's going to pop back. I don't think anybody thinks it's going to pop back. I think we may very well have a decent rally in a bear market. Something like that may happen. And but the worst is not over yet, right? The worst is not over. We don't have inflation taken care of yet. And we just have the issues that I mentioned a little while ago. We have things we didn't have before. We got sanctions on Russia. We got a dollar going through the moon. We got energy prices through the moon. But we have a war going on. And, you know, the concern that I've got is that we thought, many people hoped that would be a 30-day event. Well, now it's like 125 days, and it's not over yet. And there's always the threat. We pray to God this doesn't happen. But there's always the threat this gets past the Ukraine and becomes something far more significant than that. So I think we are in a situation, I think, globally, where there are a lot of things going on, and they're all kind of coming together, and the confluence of events with regard to that are difficult to be able to cope with because we don't know exactly what's going on.
How much of the inflation that we're seeing right now do you attribute to the war?
I don't think I would attribute that much to the war specifically, but the war is an anxiety crisis, right?
I know, I understand what you're saying, but we're hearing that it, you know, and I'm just wondering whether the average American hears that now and just goes.
I think that exacerbates the environment. That exacerbates the problem.
Right, but the actual inflation, so there's no way.
I would agree with it.
On the other side of the world, in one country, that's causing.
I said I agree.
I know. But we're hearing it every day, and it's like, I mean, we just heard it yesterday, Bernstein. I mean,
Joe, we've had this incredible retail bid in the more speculative areas of the market for a decade. You know, fintech, tech generally, crypto, these sort of areas. Does that bid move to areas like oil and gas or consumer goods, not consumer discretionary, but consumer staples, or does it just disappear for a while?
I think speculative kind of usually handles itself. So if you've been involved with too many of the speculative plays, if you've been involved, if you're an individual investor, you've been involved with Bitcoin. Now, I think one thing that with the individual investor there is, and I know Novogratz was talking about it a little bit earlier, but in fact, you asked the question, I think. I don't think the entire individual investor world, the long-term investor, is not necessarily that involved with Bitcoin. If they are, it's a 1% of the portfolio. It's a speculative play, but they can handle 1% of the portfolio. Day traders have been involved with Bitcoin, but this has been a tough period for day traders. They're not doing well at all through this period. Now, most of the day traders tend to be younger, so we always say if you're younger, you should be taking more risk anyway. So I think we learn from our mistakes. So the individual traders that are younger, they are learning from what's taken place over the span of the last several months, and they're learning with regard to what took place in Bitcoin. We were told for 2 years that Bitcoin is a hedge. Well, Bitcoin's not a hedge. We've learned that already.
Well, the other retail, I mean, look at Netflix. Netflix makes Bitcoin look fabulous. Netflix is down 3/4. So a lot of those retail stocks that people have been interested in are down even worse than, say, Bitcoin.
But the Netflix and the Pelotons of the world, they did as well as they did because of what happened with the virus. Right? And that was the stay-at-home economy, and things went through the moon. Now, if I'm running one of those companies, I can't believe that we're going to have that type of demand for the rest of our lives. So the mistake they made, they started adding people and creating tremendous inventory, and now they're reading that inventory, and they're struggling because of that. But I do think they come back. I think, though, there's a real reason for that, whereas the Bitcoin thing is still something that the world's trying to figure out.
So the Netflixes come back. What about the retail investors? Because these are new investors, relatively new, younger investors. You get burned that badly, and that was what happened after the .com. I mean, you know the retail world so well.
But as time went on, investors got back involved with the market. So the day trader were the ones that got killed. The individual investors, again, probably don't have big positions in something like Bitcoin, but they're involved with the market. Now, if I'm an individual investor, we all know this, right? You've got to have a disciplined, well-thought-out strategy. You can't ever panic. And one of the things I think, frankly, we should talk more about on your show is the idea for an individual investor, dollar cost averaging is by far the best way to be able to deploy capital. And if they've been doing that all along, they're putting money in the market now when it's low, and they were putting in money while it was going up. But that's the best way, I think, to be able to do that. They shouldn't be calling ups and downs.